and welcome to Leaders of Tomorrow, ET Now's special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. On the show, we take all of your queries that have come in to us, whether it's on social media, email or on call, and we will get our experts to answer those queries for you. And on the panel today, I have with me Dr. Anil Menon. He's faculty at SP Jain. We also have Mr. PC Kandapal. He's a general manager at SBI. So that's our show. Let's get started. The first query is coming to us from Mayur Khandelwal, and this is a call that's coming in to us. Go ahead, Mayur.
Actually, I will be asking about a question regarding commodity market, and we can see that the market is very volatile right now. We have been trading in gram, soybean and wheat, and recently we can see that gram rates have been like above the reach of trading. The gram have been like taken off from trading also in NCDEX, and are these speculations or actually there is due to demand and supply? Secondly, in soybean we can see that the rates have been same throughout the year, but so I could not understand what are the factors which are causing this this rates to be so volatile or to be stagnant.
All right, Mayur, thanks very much for that. In our previous episode, we were talking about agri products, how you really insulate yourself against the fluctuations. And a question coming in again on the agri business in terms of the variations, raw material and the impact it has. Maybe we can start with you, Mr. Kandapal.
Actually, here he is talking about speculation. So these two, gram and soybean, they are highly speculative products in the market as of now. That's why I think they have been taken out of MCX. But those who really want to procure this and protect themselves from the fluctuation, price fluctuation, they can has these things now since it is not on MCX. What they can do is that they can start using warehouse facilities for this, for storing, procuring and storing in the warehouses, and these get financed by the banks also. They can store it and then warehouse receipts can be given to the banks and against which the finance can be taken. So this is one way how to procure, say protect themselves from the fluctuation. Second thing is that again I was telling you that they can have tie-up with the local retailers, those who are supplying. So they are in the process of keeping the stocks with them. So these people can be, they can have a price tie-up with them, and with that price they can procure it throughout the year. This is two things. But for speculation we will not be able to answer.
Fair enough.
The factors are simple. In addition to what the esteemed colleague said, factors are simple. There is an element of speculation, which is the reason why the future contracts have been banned. But apart from that, there is a distinct demand-supply gap, and that's the reason why there is fluctuation in these particular asset classes. Yes, what he should learn is, it's again trading in this sense. He has to learn to live with volatility. That's number one. Number two, right, as and when the trading is restored, he could possibly hedge his position. But if he's a small-time trader, I would advise him to keep away from these asset classes, because if you look at the trend for the last 6-7 months, it's been highly volatile. And yes, the answer remains that there is an element of speculation, no doubt about that.
All right, Mayur, that's in response to your query. Let's take in our next query, and this is a call as well. It's coming to us from Sunny Jain. Go ahead, Sunny.
My question is, how do we advertise ourselves and reach out to more and more potential customers? And how do we manage the life cycle of the business, which is just in anticipation stage right now?
Okay, Sunny. So essentially, we were talking about advertising earlier, but advertising specifically on social media in our previous episode. He wants to know about advertising itself in a more generic sense as well. I'd like to start with you.
SMEs, as I've earlier mentioned, also have a unique advantage today. If they have got any USP, it's much cheaper to advertise, given the social media reach. Right? The gentleman has specifically said to potential customers. So the first thing that he needs to do is identify his potential customers, carry out a market survey, look at what is that specific pain point of the customers that he is satisfying, and then reach out to them. Now, it could be mass mailers, which again today is becoming slightly a problem. But if we can approach a proper social media advertising agent, I think today using social medias, it's much cheaper to advertise, right? So SMEs have an advantage, one, specifically because of social media, but let him not approach it directly before he does a customer study. That's my advice to him.
Actually, see, it depends on which geography he is marketing and dealing in. So, I know the print and media advertising is very costly. Social media can be used, and he can see, once he identifies the potential clientele, which is their targeted clientele, so he can understand and reach out to them by various means, not only through the mobile, WhatsApp, etc., but he can sponsor events, and he can do local pamphlets distribution, and he can, apart from sponsoring events, he can have stalls at the exhibitions, and all these activities will help him in promoting his brand.
All right, so that's in response to your query, Sunny, about using multiple medium really to try and achieve your purpose of advertising yourself. Let's take in our next query, and this is an email coming to us from SB Elango. He writes in to us, says banks are not providing credit to startups and MSMEs easily, whereas corporates can easily avail credit for banks. Why is that?
This is a wrong notion. Okay, that we are financing easily to the corporates, and SME customers are not financed. Rather, if it comes to State Bank of India, I'll let you know that we have 1 million, we are serving 1 million SME customers as on date. And if we go back in history, so before these private banks and other NBFCs, intermediaries came, SBI was the only bank which was financing to micro industries, micro and small industries. It used to be called SSI, small scale industry loan. And we can call that we were fathers of financing to the small scale industries that time. And still our commitment goes towards this. Now government has come up with lot many schemes. We already have approximately 20 to 30 schemes which are for financing of small and medium industries. Right from your Mudra loans, which are being promoted by Government of India, and where we have got guarantee, we have got collateral free things, we have got Stand Up India, we have got the Prime Minister Employment Generation Program, and then we have our own schemes like fleet financing, vendor financing, and over and above, if you do not have any other thing to showcase, then for universal purposes, we have asset-backed loan, where you come with the collateral security, you take that money and then show a business. So banks are ready to finance SMEs today. You come with a project, and if the project is viable and the activity is sustainable, so banks are willing to finance.
SME financing falls under priority sector norms. So apart from SBI, I think all banks have to follow that norms of priority sector. So one, I think it's a popular misconception, true to a certain extent, because what everybody highlights is the bigger loans that's taken off. But I think banks are doing a great job of lending. Right, as esteemed colleague mentioned, a single State Bank of India, and we have 1 million customers. But having said that, I think I'll put the ball in the other court. What the SME should realize is, right, bankers are actually dealing with somebody else's money. So they are supposed to act in trust. So when you go across to a banker, right, you need to be absolutely clear about the homework that you need to do. Keep your project report in place. Do a risk mitigation analysis. And third, right, be very clear about your projections. I find, honestly and very sadly, I find that missing among most entrepreneurs, and then they come back saying that the bankers are not very receptive. Answer is, today 40% of lending has to go to priority sector. So RBI has done its job, bankers are willing to do a job. I think a little bit of homework from SMEs will change the scenario.
All right, I hope that goes a long way towards answering your query in terms of banks and not providing funding as far as MSMEs and the SME sector goes. Let's take in a next query. It's a Facebook query coming to us from Damodar Jawar. He says, given the economic scenario, what's the future of micro industries? Sure.
Future of micro industries is very bright, because today's large corporates are sometimes SME. And in the SME also, the micro ones are where the investment in equipments or plant and machinery is 25 lakhs or 10 lakhs for service industry. So these are getting due focus of not only banks but governments also. Government is promoting, if you heard about recent Mudra loan, Prime Minister Mudra Yojana. So in that, these are being given due focus, and every bank was given target. So the branches we also did around 12,000 crore rupees financing under that. So these loans are being distributed by way of this Kishore, Tarun, and Shishu Kishore and Tarun this way. So they can approach the banks and get the financing from them under these schemes. These are collateral free and guaranteed by CGT MSE. And we see that today's the micro enterprises will become gradually grow to small, medium, and then large corporates, some of them maybe.
Okay. Dr. Menon?
Everybody needs to start small. So to lay the apprehension at rest, I think there's a good future for micro. In fact, before opening up the retail sector, we always kept saying, the bigger players will come and the smaller retail players will get wiped out. But you can see that both of them are surviving as of now. So there is space for micro units. Having said that, the gentleman should specifically go across and address what is it that he actually wants to fulfill. So when you say micro industry, what is it? Is it a very technologically oriented business? Right? If it is a capital oriented business, I would ask him to take a pause, evaluate the options and then proceed. But if it is not capital intensive, it's basically an operating expenditure model, I think there's a lot of scope for micro industries.
Okay, let's take a very quick break then on that note. But don't go anywhere, lots more on the other side. Welcome back. You're with us here on Leaders of Tomorrow, and we're taking in all of your queries with our panel of experts. The next one is an email query that's coming to us from Naveen Atolia. He says he's the real estate business and wants to know which bank or institute will give him higher loans with a less rate of interest. That's $1 million question. Has the MCLR eased the situation, and what's your advice to him?
Okay, he has not clarified whether he is into real estate development, like he is in construction, or he is a broker for real estate. So if he is in construction industry, we know that see, the contribution of real estate in Indian economy today cannot be ignored. They are trying to provide the habitat to the large population of India. All banks have come out with schemes of financing real estate builders, so who are in construction activity, whether it is a commercial real estate or whether it is a residential real estate. He can go with the project to the banks, and if the other due diligence is, he qualifies for the due diligence, then he will get a loan from the banks. And whereas the interest rate is concerned, higher loan and lower interest rate, there is some percent of margin which is kept in all such cases. Normally the interest rate would be around 11 to 11.75 to 12% or 12.5%, depending upon the starting of this. So these are linked to definitely MCLR, which has come down, and now we are at MCLR of 9.15. So it gives him enough leverage, because earlier when we were at 9.50, 9.85, so it is now 9.15. There also he is gaining, and if he is able to improve his credit rating, internal credit rating, and then he will get it at a cheaper rate also.
Apart from loans, I think he should also consider real estate focused funds. In fact, there are a lot of real estate focused funds today. In fact, there are some distressed equity funds today. The Pyramids fund is doing a great job there. So apart from loans, he needs to also look at parting with equity. REITs is today a reality. So in fact, the government is encouraging retail investors to get into the real estate asset class. So loans, as the esteemed colleague mentioned, and specifically if we can part with equity, right, there are a lot of funds which are willing to actually go and support him.
Okay, so I hope that answers your query. Let's take in the next query, and this is a call coming in from P. Juneja. Go ahead.
What are the ways of obtaining credit, LC credit from the bank, other than giving a collateral? And question number 2, what are the procedures and formalities in doing a LC credit? Thank you.
All right, Mr. Juneja, thanks very much for that. So credit for importing goods from banks. Would you have any pointers?
If you are in the business of importing goods, then you can go to your bank and then he will do credit assessment of your enterprise because what kind of activity you are into and how much is your capital and what kind of goods you are importing and what will be the usance period for that. Based on that, the banker will be deciding on his eligibility for certain credit limits. Within that credit limits, there are two kinds of credit limits. One is fund based, another one is non-fund based. Fund based is normally against the inventory which he is carrying, and non-fund based is where he wants to import through LC. So he can use two mechanisms. One is through LC, letter of credit. He can get the letter of credit issued in favor of the supplier who will be overseas, and from supplier can discount his bills there as a supplier's credit. And second mechanism is buyer's credit, where he can get LOU issued from the banker in India and to a overseas bank, and the overseas bank will be giving the foreign currency loan to him in overseas currency and to repay the supplier there. So these two are the mechanisms where there. The interest rates in buyer credit are linked to mostly LIBOR. So he can get at a cheap rate because it's around 1 to 1.75% above LIBOR. So people prefer going for buyer's credit.
Okay, do you want to add?
Just one small addition, right? Apart from approaching nationalized banks like SBI, etc., he should also consider foreign banks because that is one area foreign banks are now focusing trade finance. And last but not the least, if he is going for a foreign currency borrowing, my humble request is he should hedge his position, because most of the SMEs where they go wrong is if they have a dollar exposure, they don't go across and hedge. So once he takes the loan, he should ensure that it's a fully hedged position.
Mr. Juneja, thanks for raising that query, and I hope that answers your question. Let's take in a next query, and this is a Facebook query coming to us from Devendra Gule. He says, due to private cabs like Ola, Uber, etc., they're facing a huge loss in their business. Wants to know how he can tackle the problem and compete against them to expand his business. And Dr. Menon, this is essentially a case of a traditional business competing against a company that is using technology, leveraging technology. What do you recommend?
The first thing that he needs to understand, and everybody needs to understand, is what is Ola and Uber doing? Actually, it's better asset utilization. So that goes for all the traditional units also. Can you sweat your assets better? Can you utilize your assets better? So that's the first request to gentlemen, that can he leverage technology to ensure that, right, if you talk to a normal taxi, what he tells you is, he's not willing to take to a particular place because he believes he'll come back empty. Ola has solved that problem. So that is the point about asset utilization. Having said that, yes, Ola and Uber are also pricing their products very cheaply because they want to attract market share. Here, I think the esteemed colleague should note that I'm sure there'll be regulations coming in. So because when you look at the e-com business itself, the first complaint that most online players had against offline majors was, online is all about discounting. But the government has now come with regulations. I'm sure that selling it cheap, below cost to attract customers will stop over a period of time. So that he need not worry about. But yes, he needs to focus on asset utilization, right, and basically customer satisfaction.
Would you recommend, if you can't beat them, join them?
That's also one model. Yes, that's also one model. But having said that, I think the current trend that they are trying to do is, trying to get them out of business, right? I'm not sure that will work, right? Representing to the government to ensure that Ola and Uber would stop, I'm not quite sure, because the customers are very happy with Ola and Uber, right? So in case they can join hands and have a symbiotic relationship, I think that will be great. That will be great.
Sure. Do you want to add?
See, if he is playing in the same market, he will have to create a different USP for them. Okay, it's not that only Ola and Uber has killed the market. They are there where our services were lacking. Okay, so if he can create some USP, he can have targeted customers, and these things can help. I was going through one of your program where cars on rent they have come out. So similar kind of initiative if he can take, and then see that how he can have a different clientele or serve on a different footing to their clientele. So he will be able to beat the competition which is there.
All right, so that's in response to Devendra's question. I hope it answers your query. The next one is also a social media query coming to us on Facebook from NG Philip. Says he's in the business of electricals. He wants to get contracts from builders, but once the work gets completed, builders don't make payments on time. Wants to ensure how they get paid on time, at the same time maintain relationships with their clients and their customers. And we've discussed this quite a bit. The small person is stuck because they're expected to make payments on time, and at the same time they're not able to enforce getting payments on time. What do you recommend?
One, I think I'll again reiterate the legal framework. The MSME Act clearly says that no payments can be delayed to SMEs beyond 45 days. Having said that, it's also a question of maintaining relationship. So what he could possibly do is avail of factoring services from the banks. Second, price accordingly the delay that comes in payments. Having said that, working capital management I think is a big problem in real estate sector, and today since the industry is going through a bit of churn, that's the reason why there's a lot of delay in payments. But having said that, if he can go across to a bank and talk to them about the factoring services, maybe talk to his client itself, how do we maintain a long-term relationship, I think that problem can be solved.
Go ahead.
Yeah, I think in the market there are a lot of players. That's why these people are not able to really negotiate better with the builders. As Dr. Menon said, that legal framework says that 45 days, within 45 days the receivables have to be paid. Otherwise he can resort to the legal mechanism. But they do not do so because of losing business. So what he can do is, if he has got tie-up with the builders, he can get LCs issued from, and against the LCs he can supply those things to him. Or the factoring is the second option which is available to him. These two options he can evaluate.
Sure. All right, gentlemen, thank you very much for coming down tonight and running us through your expert opinion and all of those queries. That's all we could pack in on this show, but you can always write to us at leadersoftomorrow@timesgroup.com. You can reach us on social media using the hashtag LOT, or call us on that number which is on our screens if you have any queries for our experts. Thanks for watching. Have a good night.